Gold over $5,000 per ounce. Coming soon. Hello, this is Derek from TradeTechnicals.blogspot. I hope everybody is doing magnificent. And have you heard the whole hype about gold and silver? This video will mainly be about gold and it reaching $5,000 an ounce coming soon. In this video, I'm going to go through some technical and some fundamental reasons for this $5,000 per ounce. If you're watching this video on YouTube, make sure to check out some of the links in the more info. The same links will also be available on the blog as well. So we're going to start off with some fundamental articles that we have seen. All these articles, of course, are in the more info. And the first one here was written by ameinfo.com, an article written on Sunday, April 23rd, 2006, so it's over 3 years, and the title says, will gold ever be worth $5,000 an ounce? And at this point here, it is when gold was at $640 an ounce. They were mentioning that the next price should be around $1,000 and then $5,000, so they nailed that $1,000 very well. That was the next price. We have retraced from that point. I'll show you later on the charts why that is important. But nonetheless, that's what they were saying. At the very bottom of this point, it says safe haven. However, gold might well be the quickest asset to recover from such a crisis. First, there would still be funds that need to find a home, and gold offers strong residual value and other defensive properties. Secondly, the response of the U.S. monetary authorities to such a financial crisis would almost certainly be the printing of money, and this would automatically enhance the value of gold as a currency with a fixed supply. Under this scenario, gold could start a very powerful rally indeed to reach its previous 1980 value. With an adjustment for inflation since then, gold needs to be worth $3,200 an ounce. And remember that markets tend to overshoot on the upside, so $5,000 an ounce is not impossible. So should gold investors just hang on? This is probably the wisest counsel, as judging market moves and timing sales is notoriously difficult, and the upside to the medium to the long term looks excellent. Well, that was a very good article, and $3,200 an ounce is what they say it was inflation adjusted. Remember, this was 2006. As of the fall of 2008, it was actually close to $6,000 using shadow stats as its high point. So in reality, since then, gold has been hammered really hard, and going above that number is not that big of a surprise, really. This next article, it says, this is from SwissAmerica.com, and it says 73 economists agree on $2,200 gold. And 73 economists apparently agree on it. In February of 2009, gold prices hit $1,000 an ounce as stocks fell to decade lows and sent investors rushing to safe havens. The commodity supercycle was swept, gold prices up nearly fourfold since 2001, but that's just the kickoff phase, say the experts. And of course, there's a chart here on the 5-year gold. I will be getting into the charts very soon, but on here there are many different analysts who are talking about gold that is going to be going a lot higher. Everyone has different opinions, but there is many different people who are talking about gold going a lot higher. Many are older articles from 2006 and 2005, so it's something that is worth checking out. This article here, this comes from 321gold.com, and this was written on May the 4th of 2000. And I'm going to read this article, and it says that gold isn't going to $2,000 an ounce. Before you gag on your coffee or suffer chest pains, allow me to explain. We're about 8 years into the bull market. Of course, that's a gold bull market. And gold has breached the $1,000 level twice and has spent weeks trading above the old high of $850. Some observers are now saying that gold's pretty much had its day and that once the recession is over, it will retreat for good. However, the 4-digit gold price we've seen so far, with no price inflation to speak of, no effects of the atrocious increase of the money supply, and despite a rising dollar, what happens to gold when each of these pictures gets turned upside down? High inflation, excess cash jolting the economy, and a falling dollar. After all, gold's performance to date has been powered only by general anxiety, not by any visible erosion in the dollar's value. I decided to take a fresh look at calculations that could be used to appraise gold's upside potential. Not one of them by itself comes with compelling logic, but they all point in the same direction. Gold's percentage rise in the last bull market. What if gold in this bull market repeats the percentage rise in the last bull market? In the 1970s, gold rose from $35 to $850 an ounce, a factor of almost 25. Our low in 2001 was a little over 250. Multiply that by under 25 and you get a price of over $6,000 per ounce. U.S. gold holdings to money supply. The M1 money supply consists of currency and checkable deposits. The U.S. government currently holds 287 million ounces of gold. If the government were to make each dollar redeemable by the amount of gold it possesses, we'd arrive to the following price for gold. 1.569 trillion divided by 287 million ounces of gold. That equals roughly under $5,500 per ounce. The gold Dow ratio. The ratio was about 1 when gold peaked in 1980, meaning the Dow and gold were the same price. To restore that relationship at today's stock prices would mean when the Dow is at 6,626, gold should be at 6,626. Of course, we think it's likely that the Dow will get a lot lower before gold peaks, but even if it drops all the way to 4,000, that would imply a gold price of at $4,000 per ounce. So I'm going to be showing you some charts at the end of this video, but I'm going to show you one quick one here now. This is the chart of the Dow Jones priced in gold. This is from the early 90s on. And we can see at the top part here that it was over $40 an ounce. This was right around the start of the decade of 2000. And now we are trading at under 10 ounces of gold. Peter Schiff says this is going to go down to 1, and this is most likely a more better accurate way of looking at the stock market other than looking at it in dollars. Going back to the article now, all the money in the world versus gold reserves. If the public eventually sees the paper game being run by the central banks for what it is, governments will be forced to back their currencies with gold and perhaps other tangibles like silver. Assuming they had to go into the market and buy the gold needed to restore faith in the currencies, the numbers might look like this. Total central bank reserves equals about 5 trillion divided by the 930 million ounces of gold reserves. Well, that equals $5,246. So there is so much on this page which is showing that it's going to go a lot higher. In fact, there's even some that say that gold might even be worth almost $200,000 or even $32,000. But basically, they were saying that it is not going to go to $2,000. No, it's going to be going higher. Even ManOfTruth recently came out with a video. MOT, if you haven't heard of him, I highly recommend his page. He has predicted gold to go to $2,000 an ounce very soon. And I think that's a short-term and or safe prediction, because I think short-term, and short-term is within the next 10 to 12 months, that it will go to 2,000. But on the long-term time frame, which is only about 3 years, it's looking to go over $5,000 an ounce. And you say, okay, well, why is it going to go so high? And a lot of it happens to do with money. When you look at how money is created, and this information is available to us with great documentaries, like the ones like Money as Debt, which explains that our money is nothing but debt. We used to back our money by assets like gold, but Mr. Nixon in 1971 decided that we should go off of a gold standard. So we can take a look at this money here, and it says that it is plain money, and it is, but what's the difference? Because it's all pretty much the same now, isn't it? They tell us that it is a legal tender for debt, which is exactly what money is. Nothing but debt. So this is a reason why gold should be going to 5,000, not because of the strength of gold, but because of the weakness of the dollar. And gold doesn't really go up or down in value, really. It maintains its value. And it has been only shown that the US dollar has lost its value, as it has lost close to 100% of its value since the Federal Reserve began almost 100 years ago. And it's over 98% of its value that it's lost, where in that same time, gold has held its value. That is a big reason why gold is going to $5,000 an ounce. So these are the fundamental reasons for gold going to $5,000 an ounce. Now let's go over the technical reasons for why it's going over $5,000 per ounce. Gold closing Friday at a little over $930. And there's a technical indicator that traders use, which is called a head and shoulders pattern. Basically what this means is a pattern what looks like a head and a shoulder. These would be shoulders, this would be a head. When a pattern like this arises, this usually means that the stocks go lower. That's a general rule that they go by. And at the same point, there's a thing they call an inverted head and shoulders pattern, which is the opposite, meaning this level here is lower than this level here. And this is the opposite of a head and shoulders, which means instead of going lower, this usually means it goes higher. And this has got an inverted head and shoulders pattern, which is forming right now, which means for it to go higher if it plays out. This is the pattern that is forming right now. It's been forming very, very nicely, and a pattern breaking this could lead to major upside on gold. And it's got to mainly get above this 1,000 mark here. And it's looking like it's going to work towards getting it. It may take a few months to do it, maybe even into the fall, but it's looking like it's going to break this little area here. If you are trading gold right now and you're watching this video around the middle of May, it is holding this 100-day moving average nicely. The 50-day moving average is starting to flatten out and rise, and it looks as if the 200-day moving average should easily flatten out, especially when these days get taken off of the 200-day moving average for gold. So with this head and shoulders pattern, do not be surprised that when this 1,000 gets broken, that we have a lot of moves to the upside. We have a fiat dollar that's definitely going to be supporting this to go a lot higher, and big moves, quite frankly, are not that much of a surprise with gold when we see really what is going on with this market right now. And we've been a lot higher, like we've said, with the inflationary period. If gold was $800 an ounce back in 1980 area, well, Shadow Stats says that that's pretty much about 8 times higher than it is now. So 8 times higher than it is now means that gold was 6,000. So breaking this is not this trend line, but breaking that 4,000 or 5,000 is not much of a surprise. However, for traders, drawing trend lines like this can help you determining if something's going to reverse or not. Looking at the weekly term time frame, each one of these pictures or candles is 1 week, and we have seen gold go from this area here of around 250 up to 1,000. So when Peter Schiff talks about gold being this big market, this is exactly what he's talking about. We have this uptrend line which has not been violated, nor has it even been tested. This little sellout here didn't even test this uptrend line, which is showing how bullish gold really is. Looking at some of these moving averages on here, the blue line is that 200-day moving average that I'm telling you is looking to flatten out, and don't be surprised if it acts this area as support as gold goes higher. This black line, that's a 2-year moving average, so the average price of gold continuously is going higher and higher over the last 2-year price, and this red line is the average price over the last 5 years. So the average price gold has closed out over the last 5 years right now is about $650, and it is going higher. And you hear people on CNBC who don't like to credit gold too much, but they sure like to credit the stock market. Boy, do they ever like to do that. Well, this is a comparison with the Dow Jones and gold. You can see gold here, based on its percentages, it's been roughly trading between a gain of about 150% and 250% in 2008. That's really been the range that it is, and this is the gain since right around the turn of the decade. So we've seen it gain this percentage in the time, whereas the stock market, well, it has basically ranged between down 40% to up 20% over this time. That's what the stock market has done compared to gold. We are seeing gold and stocks pretty much going in 2 opposite directions, because gold is where the value truly would be. That just to me is a no-brainer for the situation for gold. It's a much better play than stocks right now, and it's showing it in the charts. Looking at the longest term time frame that Free Stock Charts has is going back to around 93. This previous level of resistance has been acted as support. These moving averages on here, the blue one is the 3-year moving average, came down to it to support. The 5-year never got tested, but the 3-year did. This, of course, is the 5-year on the black one. This red line is the 10-year moving average. These are designed to keep going higher as long as the dollar keeps going lower. And I think that the very easy answer to the dollar going lower is that it most definitely does. And as long as that goes down, this is going to be going up. Folks, $5,000 an ounce is most definitely looking to be a realistic situation that could happen very soon, because if the dollar, which is backed by nothing, and I shouldn't be saying if, I should be saying when all this stuff happens, people are going to fly into gold like you have never imagined. And it's not just gold, it's really all the commodities that can be used as tangible assets. Whether it's silver, whether it's copper, whether it's platinum, and it doesn't even have to be metals. It can be food, and it can be water, and it can be tractor equipment. Anything that can be used that's got use of it, where paper money seems to not have its value right now. So thank you for watching. I hope this has helped your information for researching on gold. Remember to check out the links that are included with this, and have yourself a magnificent day, everyone. Bye-bye.